We got Joe Mazzola joining us from Charles Schwab out on the West Coast. He's Director of Trader Education. Joe, we got our monthly report here on. Oh, you're in New York, Joe Mazzola. And looking
let me
fresh.
out here, Oliver. Yeah, thank you, sir. No, they left the West Coast. California fires come out here. We've got the Canadian fires.
I was
so
about to say. Maybe we blame Joe for bringing out the smog.
Absolutely. It's hard to breathe out here, Oliver.
Hey, what's going on with all the traders here at Schwab the last month? There was some pretty interesting stuff in the survey. We always like to check in. Is all the bullish sentiment and the price action showing up in the survey?
Well, I'll tell you what we found. What we found is that a lot of the bearish sentiment really has been towards real estate, utilities. You know, that's where we started to really see some of the bearish sentiment from some of our traders. I will say this, though, one thing to kind of keep an eye on, and it really takes hold today, is we saw net sellers amongst a lot of the tech names at the end of May. So your NVDAs, your AMDs, your Microsoft, even Uber and DraftKings. Look what's happening in the market today. You're starting to see a bit of that rotation. The traders also mentioned a couple of things that they've been looking at really is looking for a value trade. Once again, what's happening today? If you look kind of under the surface, what we've been seeing the last 3 or 4 trading days is you really start to see that rotation out of some of those high beta tech names, a little bit more into some of the value names. And it looks like, from at least the sentiment indicators from our traders at Schwab and TD, they might be calling that one the right way. So
the fade, they're not really like fading the big tech rip, right? They're not like going against it. Are they riding the wave? Do you see, people chasing it?
You know, that's not something we're seeing right now. I think what we're seeing is a little bit more of a fade, right? So selling into strength, which, in all honesty, Oliver, I think makes a lot of sense. I think the fact that you've seen kind of that dispersion in terms of the returns over this past, year to date. I mean, look, 25% of the market cap of the S&P 500 is made up of 5 stocks at this point. That's a concentration that we really have not seen in 50 years worth of data. And then if you look at kind of a little bit further below the surface for some of the breadth indicators, only less than 20% of the names in the S&P 500 right now are outperforming the index. So keeping an eye on a couple of those indicators, it really shows that the strength has been, kind of tied within a few names. And I think that, maybe a bit of a contrarian play by some of the traders, some of the investors, that we call clients are reducing some of their exposure and selling into this rip. And by all means, I think that probably makes a little bit of sense in terms of risk management.
Speaking of risk management, plans for the next 3 months. Seems like the most popular response is moving money into individual stocks, some ETFs, crypto way down on that list. Only 7% of people say they want to invest in crypto. I know from our previous conversations with Barry that this community of traders has never been like super bullish and into the crypto stuff, but it seems like that's a big drop off. They're going to invest in stocks, ETFs, crypto's way down there.
Well, let me hit that ETF one first, because I think that's important. I think what it says is that the traders at TD and Schwab, what they're looking at is single stocks. What they're saying is, indexing at this point doesn't make as much sense. They're looking to more actively manage and look for some of the single stocks because they believe, based upon the education, based upon their research, that they can outdo what can be done at the index level, especially once again, kind of goes back to that idea of the concentration and the risk that we've seen there. In terms of crypto, I think the more volatile that market is, the more it kind of shakes people out. I know you talk about that quite a bit. It's not necessarily an investment as much as it's really more of a trade. And I think, kind of given what we've seen in the last few quarters, there's a possibility that some people just don't want to participate in that volatility.
Okay. Interesting. The ramifications of that then, to project here, it seems like if, crypto is something that kind of needs flows to come in, they may not be coming that way. This is not necessarily reflecting the exchange stuff of the last couple of days, right? Because this survey closed up, at the end of last month?
Yeah, exactly. It finished in May.
Okay. So people are stock picking. They're done with the crypto craze. They're picking stocks. They're not piling into the funds necessarily. But the fact that there's still quite a bit of stock picking happening, I think is pretty interesting, because there was this idea that after the regional bank blow up, everybody was just going to stuff their cash under their mattress. That doesn't seem like it's happening.
No, not only is that not happening, but that is actually one area where traders did say that they're looking for value, and that is in the financial sector. Now, they differentiated between the regional banks and maybe some of the larger conglomerates where they saw some value there. You know, kind of the whole baby with the bathwater getting thrown out. And so they looked for opportunities there. They also kind of designated that they would be looking a little bit more towards fixed income. So while they might be rolling out of some of the indexes, rolling into fixed income, rolling into a little bit more active management and single stock picking was the collective response.
Okay. All right. Nice. Anything else stand out that you want to point out to us, Joe?
I'm sorry?
Anything else stand out? Any anomalies from the report?
Yeah, you know, a couple of the buys that we saw that I thought were interesting, and this kind of goes back to the value trade, is there are a lot of buyers in Tesla. You know, I don't know if we necessarily call that one value, but given kind of the pullback that it had seen in the first few months that coming into the year, Ford was a big purchase from clients, and then a couple other ones that you know that would fit that bill would be a Disney and Bank of America. So those are some of the more heavily purchased shares amongst that trader group.
All right, so buying the big dip in Disney, dabbling in banks, and it sounds like they like cars too. Tesla's been doing pretty nice. All right, thanks, Joe. Appreciate thanks for the update on the IMX here. Always a good look what's happening at the Schwab Sentiment Survey. Joe Mazzola, Director of Trader Education.